Hey guys, what's up? Welcome to the Real Estate Powerplay podcast. I just want to invite you guys into this awesome podcast that we're doing today with my really good friend, Tom Barry. We're going to hammer on some cool commercial real estate stuff. We got a lot of funny stories to share also. So enjoy this podcast. And I just want to say thank you so much for listening. If you enjoy this podcast and you're really getting into it, be sure to contact me or Mark, and we'll be happy to help you out getting more involved into real estate investing. Today is just an awesome privilege. I've known Tom Barry for quite a while. I would say over 10 plus years in my career, almost my whole career in real estate investing. He's definitely played a big part of my just my journey in the whole real estate investing world and learning that and business concepts and perspective. And so we're going to dive in to one of the coolest things that we've been talking about a lot lately is commercial real estate, and something that he's been doing for quite a while now. And so, Tom, welcome to the show.
Hey, thanks for having me on, Gabe.
So let's dig in. So why don't we do a little bit of, for those who don't know, who are you, where you came from, what's your story?
Oh man, that's a long thing. So I'll try to keep it to 1 minute or less. I've done about everything in real estate that you can do with a piece of property. Been doing this full time for almost 20 years, and part time before that for another 20. So right now, what we do is we run a private money lending company. We lend in about 28 states now. We buy shopping centers across the Midwest and Southeast. All across pretty much the South over to Texas and Colorado area. And we run a couple of private real estate funds for high net worth investors to invest in. Some of those we focus on real estate notes, and yet other ones we focus on actual physical assets.
That's awesome. So how did you get into doing real estate at this level? I mean, we know most people get involved with single family and you're doing flips and this, and then I know most people know that you went into multifamily and really built up your portfolio through multifamily. What was the transition? What was this thing where you're going, hey, I see a place here in the market where this lending opportunities are there. So what led you to just really grow this huge lending company?
Well, I think you really answered your own question when you said most people start in single family. I'm no different than that. I started in single family, just renting out the house that I lived in when, I was working in corporate America, and they would move me from, one town to another. Instead of renting, I would just lease out the house that I was leaving and go buy the next one. And then I started using creative finance. The market in a couple of particular situations was such that, I wasn't able to sell a house. Well, I would just sell it on owner financing and hold the note. And I mean, I was doing this stuff and didn't even know the names of it, honestly. I bought a house, when I was moved to Medina, Ohio. I bought on seller financing. And again, didn't even know that was a thing. I didn't know that was a whole niche side of real estate, but I've really always had a penchant for real estate. I've just loved it. So even if it was just, one rental at a time, pretty much from the time I was, the year I got married, I bought a house to live in January, and my first rental property in October of the same year, back in 1988. So wow. I've been in real estate investing literally my entire adult life.
Since I was 6 years old.
Yeah, no, I said adult life. Well, since
I was 6 years old, that was 88. I'm like, holy moly, man. Goodness.
Yeah.
Oh. So that's fun, man. So, okay. So so now you get into this, you've been running ILS, built this up for 9 years now, right?
That's correct.
Okay.
That's correct.
And this is something where if I were to ever say for you and for those who are listening, it's almost like you hit this gear, because I've watched you go through this journey where it's also really enjoyable. It's not just a job. It's not something to do. Obviously, we're all in business to create capital, to raise our families, build a lifestyle, build our dreams, and do those other things. There's a side of this that I see in you and in specific business owners that really do well is the power of enjoying what they do. Can you expand on that more? On like how you enjoy this part of real estate that I think people kind of miss.
Yeah, I didn't always. I think that too is kind of like getting into commercial, where most people don't start there. Well, most people don't start enjoying real estate either, because at first it is a grind.
It's a
You
grind.
got to hustle, you got
Yes.
to put in the hours, you got to put in the work to get to that point. But I think the goal, with every real estate investor should be to build something that you enjoy running and you enjoy working in. Just like I think the goal should be to get from single family and residential housing into commercial real estate. Everybody knows that most people that are, multimillionaires and so forth, that more of them get there through real estate than anything else. But people and I left this out for a long time until I started studying some of the really great guys that built their wealth through real estate. They didn't do it through single family homes.
Right.
What we should say is that the bulk of people that get really wealthy in real estate do it through commercial real estate. I'm
Right.
sorry, get wealthy, do it through commercial real estate. We should add that word in there before real estate, because they sure as hell don't do it through single family housing.
Right. Right. Yeah, I think that's one of the things that you and I joke around a lot about is just there's an allure to single family. And once you look, guys, I've been doing single family for I think 12 years, but I've been flipping for way longer than that because I used to run the construction company and we had 3 crews in the road. That's 3 crews means more than 3 houses at a time, really, if you think about it.
Mm-hmm.
And there's an allure to it of like, oh, wow, you can touch something and transform something. And so, and I love that aspect of doing anything I touch, though. The allure of single family is the fact that you can see a pretty decent, quickly return on investment. And that keeps your ball rolling and your income's going and you're moving forward. And that's just how single family is for me. And I know for most people, because we can see those dollars right there. I think the transition period is something, well, let's go into it. So, I don't want to do the why don't people transition, but what would you suggest someone who's looking at doing more commercial, whether what you and I do, whatever type of commercial, what do you suggest they're doing or to be keeping their eyes on?
Yeah.
Always keep it out there, always have a focus, you're always kind of looking at it, or is it something where you kind of have to do both for a while?
You do, absolutely. And I will go into the why don't, because I think that is instructive. Why don't people do it? Most generally it's mindset. Most generally it's belief. Most generally it's fear. And, we try to shy away from things we're afraid of as human beings. So in order to combat that or to overcome those hurdles, I would say start small. That's what we did. Melissa and I bought our first 2 commercial properties the same month back in December 2010, and they were 2 5-plexes. Well, 5-plexes qualify as commercial, right? So we started small. One of them we paid $95,000 for. The other one was like, I don't know. It was under $100,000 as well. So when we use the word commercial, people automatically start thinking multi-million-dollar numbers.
Right.
And guys, that's not how most of us start. I started with a couple of commercial deals that were less than $100,000 a piece. But then quickly, like within the next 4 months, I bought one for $555,000. And then, 3-4 months later, I bought my first over $1 million deal. It was $1.8 million for a 72 unit deal. And, a few months later, another 1.7 for a 78 unit deal. So I built my mindset up from the $95,000 little deal in Galveston, Texas to, okay, now we can take down a 1.8, we can take down a 1.7. And, look, when I went over the next digit, when we bought our first deal for over 10 million, oh my gosh. I mean, talk about pucker factor. Let me tell you, I was scared to death because the biggest deal I'd ever done was, 1 point whatever. It was not even 2 million. But then we bought this building for like 12.6 and it just freaked the hell out of me. But afterwards, I'm like, okay, we didn't die from that either. So now, it's like, but I had a guy send me one for 50 million the other day, and I'm like, dude, I'm not that big. I don't do deals like that. So I still have this limiting. There's still a limit here to what I think I can do. But the key for everybody is whatever your limit is today, just stretch it a little, push it a little and say, oh my gosh, $500,000 commercial deal. I don't know. But you know what? I got to do it sometime. I got to start stretching. I got to start growing, or I'm just going to flip houses for the rest of my life. And look, if you're cool with that, and that's going to get you to your goal, I'm not saying there's anything wrong with it. But for me, I wanted a different lifestyle than what single family housing was going to get me. And, we can go into that lifestyle next and talk about why I love what I do now, if you want to, because that's a perfect tee up for it.
That is, so Tom Barry's leading the charge. So, we could dive into that because I think that people, one of the things that I've seen that why people don't make that leap and that jump is because of those incremental growths, and they don't know where to start. They don't know where to really go, or who to get counsel for, or what to buy and what kind of commercial. I was so adamant to get commercial that I was like, I want a mobile home park. I don't care. I want a good deal. I want a park. But it was before that, it was a multi-unit building facility. And so if I didn't buy that, I had to mess with septic, and I was out there on the skid steer one of the days going, guys, listen, we need this dirt. I'll go get the skid steer. I'm going to go do this. I don't know how to do it, but I'm going to go figure it out. And we just went out there. I smoothed all that stuff out. And this is for those people that are kind of like me, that are just going, look, I'm a hands-on person. I don't like to wait. I don't like to have other people tell me what I can and cannot do. When I'm looking at the property, I'm like, it's available right now. Let's go. It's just dirt. But that small leap, just to kind of iterate what you're saying, it was small, but it was a multi-tenant center, right? And now a bunch of tiny homes and all this stuff and stuff I never knew about. I didn't know a lot about septics before. I didn't know a lot about wells and pumps and how far away and what can be in coding. But I learned all that stuff. And sure enough, within like 6 months, I'm like, man, I think I could go bigger. I think I know enough. And then I go and I buy this mobile home park that's kind of the same setup. There's just a lot more houses. And this isn't one of the cookie cutter ones that are inside like city limits or not. This is like out rural. And I'm the same thing. I'm just going, wow. And I'm there, and I'm directing traffic instead of being the one in the traffic. Right. Going, okay, I know what to happen over here. And then I'm directing guys going, I know. Yeah, I agree with you. Gabe, okay, cool. Well, let's go ahead and knock this part out over here. And let's start building this out over here. And stuff I would have never known before. And I think that leap was so big for me. It was good for me to just jump into it and the other part is, and this is something that kind of tees in also to what we're going to go into, is where we focus on my big phrase lately is like, where the focus goes, the power goes, or power flows. And like, you start focusing on it long enough and things just start coming up, right? That next one comes to your lap, right, Tom? And you're like, wow, this is a little bit bigger, but let's try it out. It's in my lap. So
that's right.
So, anyways, I just wanted to share that because I have those stories too, maybe not in the $12 million range, but in the smaller brackets, and I'm growing and growing. As you know, you and I are looking at stuff. Let's go into this perspective of like, what does commercial get you? My number one, I wanted to have my weekends free. I wanted to have, like, my kids are soccer kids, as you know, Tom, most people know. I just wanted to have the ability to hang out with family and not run around all the time. And if someone didn't get something done, I'm at Home Depot helping them out, or I'm on the phone while they're at Home Depot, you know, or something to that degree. So what has it done for you?
Well, the first thing that came to my mind when you asked, what does commercial get you, was time. And it's the same thing that you said. So I think, I agree with you 100%. And it's for a lot of different reasons. The asset class itself is different. Now, I'm going to separate apartments out of commercial for a minute. I do, and that is the commercial that I started with. And most real estate investors do. They'll graduate from single family to multifamily, and then they'll move out of that and on to other asset classes. I think it's very common. For me, apartments looked familiar to me. It was just several houses slapped together with common walls.
Right.
It had the same components that my single family homes had. It had bedrooms, it had bathrooms, it had a kitchen, etc. When you look at other commercial classes, they look funny. They don't have some of those components, right? You look at a self-storage. I'm like, I don't know. This is complicated. All it has is a concrete wall and a door.
Right.
What the hell am I going to do with that? And you look at a retail center or a shopping center, and that's different yet. So I think it's common for us to move from single to multi, and then move from there to other classes. But once you do, once you get out of residential entirely and you get into the classes that don't have people living in them, whatever that is, it's a whole different world, because you're dealing with a different type of tenant. You are dealing now with a business, not with, Joe and Jane and the family of kids that all got asthma. Every time they see something black in the corner of the shower, immediately they're going to tell you that everybody in the family has asthma, and that's black mold, and that they're going to die from it. I don't have any of those kind of tenants anymore. I have business owners that run a business, and some of them don't even open on the weekends. So I've got my weekends free. I've got after 5 free. They don't expect us to answer the phone until Monday. They don't have that expectation of us, because they wouldn't, So it's a whole different level of tenant. It's a whole different level of financial situation as well. These people, sometimes they get in a pinch, but it's far less frequent than a family household living in your rental property. It seems that they get in a pinch much more frequently than a business owner does.
Right. That's a good point.
It's a different lease structure. I don't have to deal with maintenance in my triple net properties. I don't have to deal with any of those things. If the air conditioner goes out, that's not my concern. That's the tenant's concern. If the toilet backs up in their restroom in their store, again, not my issue. They don't call me for that. They call a plumber, like they should call. It's not the landlord's responsibility anymore. So we eliminate a lot of those responsibilities, a lot of those maintenance and management issues that we have when we're sitting in a residential housing provider situation. And that gives you your time back. That gives you a lot easier management and a lot easier life as a result.
This is, I think this is a good segue into like the commercial side of like key components that anyone really, and you would advise anyone, and you've advised hundreds of thousands of people or thousands of thousands of people on the different aspects of their business. What is something that is, besides the dollar amount of like the purchase price, that you see as a limiter for those getting involved with real estate, with commercial real estate? Is it learning tenants, or is it construction of a big project, or is it just the acquisition, or is it the financing, or learning a P&L report or a rent roll? I mean, what is something that you're going, yeah, these are the top 3-4 things that people come to you with?
Yeah, I think all of the things that you just mentioned.
Well, those are mine. So.
Yeah, absolutely. All of those hold people back. For me, and I can only speak for myself and, the folks that I've coached over the years. Again, that asset looks different. So,
Right.
I know where to get the stuff to fix a single family home or even an apartment building, right? I can go to Lowe's or Home Depot and get everything I need to fix either of those assets. But you start moving into other asset classes, now there are components, I don't know where to get those. We have an office building, in Houston, a 3-story office building, and those have these aluminum trimmed walls and these special doors that snap in. I don't know where to get that stuff.
Right. Yeah, they don't have those at Home Depot.
You can't go to Home Depot and get those components the same way with, my shopping centers, the way those things are constructed in the front with the windows and the aluminum. I don't know where to get that stuff. Right. So I think, first of all, it's the fear of the construction side. Who do I get to work on that? I can't use my crew to do those things. They don't know how to do it any more than I do. So that, I think, is one of the concerns. The financing is, of course, always a concern. Leases are a huge concern, and they should be, because the lease structure itself and how that's written is going to be about 1/3 of the value of that asset once it's stabilized. So, I mean, I see people really blow that all the time. You and I pour through leases all the time, and I'm constantly pointing out, I'm going, you know what? The best year for the buyer of this particular property is going to be his first year of ownership. Yep. And then it's going to go downhill every year until these leases expire 20 and 30 years out with extensions or options. Well, who the hell would want to buy that property, right? And I guarantee you the person that was writing those leases didn't know that when they wrote them.
Yeah, that's a good question. Like, do you think that and this is something that crossed my mind as we're going, I know what property you're referring to, because that's a lesson property for me of going, wow, someone's going to buy this thing and be screwed over for maybe 20 years because of the way this lease was structured. Yeah. Do you think that in your experience, are people using those specific lease broker attorneys and other stuff, or you think they're just kind of winging this stuff themselves? I know the national tenants do, if we look at if we're specifically talking about shopping centers, but what is your experience on that?
I think a lot of commercial real estate is owned by mom and pop owners. They are not as sophisticated as what we think they are. And you know this to be true. Yeah. Now, as a buyer, you know this to be true, where I think originally you didn't think that was true.
Not at all.
And I didn't either.
Yeah. And for those who are listening, I literally thought when we were getting involved with commercial real estate that everybody was the pro because it's commercial. Yeah. Everybody had an attorney or 4, right? Everyone had these huge, deep pockets, and they're going to blow me out of the water in anything that I do. Like there's just some what do you call it? Misperceived
misconceptions
that I had of that. And you helping me, and just, I'm part of other groups and other stuff, and you helping me going through some of the leases. I never thought that a single, like a mom and pop person, Tom, would do a lease with a national. It just never crossed my mind.
Well, and there's also, let's go back to the why people don't do it. Imagine the intimidation factor, right? Of having to go up against these perceived sophisticated pro investors, and negotiate a purchase of a property. And that intimidates a lot of people, and that keeps them out of this arena. And it shouldn't, as you and I both know, because there are so many of them that aren't pros. I have a borrower from our lending company. He bought a large commercial asset, and he got it all done, and he put a national credit tenant in it. And he's like, man, this thing is worth, X number of dollars. It was mega millions, just under 100 million. And
Wow.
I'm like, man, congratulations. Well, he just for fun, he attached the lease, right, in the email because he was bragging, hey, I just got this national credit tenant. That means the property is worth,
Wow.
twice what we thought it was going to be. Well, I just opened it up and I looked at the lease and I shot back an email and I said, this is horrible. This didn't add value. This didn't add value at all.
Right.
And I pointed out one provision that their attorneys had put in, and he just agreed to it because he was so excited to get this big nationally recognized tenant. And he blew me off and he's like, oh, you don't know what you're talking about. Nobody's going to care about that. Well, it blocked him from refinancing the property or selling the property.
Wow.
And I actually had to get on the phone with his tenant's attorney and explain to them how it would be in their best interest to take that little provision, one sentence, out of this 15-page lease.
Wow. So
that he could refinance out of my hard money and into permanent financing, because he was not going to be able to do it with that. And look, this is a very sophisticated investor,
right,
with a lot of commercial real estate. So the structure of the lease, I cannot stress it enough. It can make or break the value of the property, which is what we love about commercial real estate, right? Because with a single family home, I have absolutely no control over the value of that property. The value of that property, other than me fixing it up to the highest standard of the neighborhood, it is going to be determined by other properties in that neighborhood and what they sell for. I have zero control over that. But with commercial real estate, I have tons of control over making the value of my property better. I can put better tenants in it. That raises the value. I can do better lease structures than what I bought it with. That increases the value. So I have so many things that I can use to force appreciation of my real estate in commercial. And those techniques were not available to me in single family.
Let's go there, because I don't think most people know what, like, even you saying that, I think might go over some people's heads. I know in the beginning it went over my head years ago, and I've heard one person tell me this, and I'm going, wait a minute, like, it's one of the things that we do whenever we look through properties, Tom, is we look through the three indicators. And you were saying leases bring up 30% or more of the value of the property. What are some of the other indicators that bring up value of a property that you think, like, for me, it was only like, this is a good corner. Oh, wow, there's an Old Navy in here. Like, I didn't know some of this stuff. I didn't know that the neighborhood property, or that one that has the dry cleaners and the dentist or whatever in there, actually is a good product. I just thought it was ran down facility.
Yeah. So, I mean, the three things that are going to determine the value most generally on a commercial asset is going to be the physical asset itself. And that's what we always know about, right? It's a good corner.
Right.
It's got a high traffic count, good visibility for signage and so forth. And that part everybody's pretty understanding of already. But the other two factors that are, I can't tell you in what degree these things bring value to it, but the other two factors, certainly in high degree, is, first of all, the tenant mix. And the better the tenant mix, the higher the value. So what is a good tenant mix? Well, first of all, it would be complementary businesses in the same building if you have a multi-tenant building. Or in a single tenant situation, it would be a tenant that is both internet resistant and recession resistant, and is a national credit tenant. That would be the creme de la creme of tenants. I want somebody that's internet resistant, not going to get put out of business by online shopping. I want somebody that's recession resistant. So as the economy goes through its ebbs and flows, and we end up with a recession at some point, which we always will. I want businesses that are going to be resistant to that and not going to struggle to pay their rent to me. And then on top of that, the better the credit rating of the business in there, the higher the value of your property.
That's good. Yeah, for those who are listening, credit rating, like, okay, so we'll give a Dollar General because they're everywhere and they're still popping up everywhere. They're a national credit tenant, just to kind of give those who are listening and not really sure what that means. There's the credit worthiness is legit. It's up there.
Well, and that's a great example of one that hits the trifecta, right? It is
Right.
internet resistant. You're not going to probably order the things that you would go to the Dollar General to buy online. It's a convenience type of situation. People go there to just grab the stuff they want that day. It's also a discount shopping, which means it's going to be recession resistant. In fact, studies show that dollar type stores, whether Dollar General or Dollar Tree or the other off-market stuff, actually increases in sales and profits in times of economic trouble. And then on top of that, you've got the fantastic credit rating of Dollar General based out of Tennessee. So trifecta. And we actually have one of those in our Dayton, Tennessee shopping center. So, I love Dollar Generals and the other stores similar to them.
Yeah. So guys, if you're listening to this, you're probably like me in the beginning when I'm driving through, or me and the kids. And, I signed up to a thing with a national training 10 years ago. And one course, just one, was over the commercial and shopping centers. And my eyes were always open to how things worked. How do you get in and out? Or we've all seen a shopping center that's just never does well. Well, that's probably the ingress and egress and the traffic count. Just someone couldn't turn around to get into that center. Will never be a great turnaround, or maybe it's not at a major light or something like that. Or maybe in a declining area. There's stuff that I used to see and go, okay, that's good or bad on a center. Now my eyes are open to just the power of, I can run, so we do this in notes in single family. So we still create notes in single family. We do wraps and stuff like that. And we we go through an RMLO, right, to get somebody into our property. And we want to make sure that note's really good. So that way, if I need to sell it one day, it's a good grade A note. The buyer is always going to close on it and always going to go. So the way, for those who are trying to make that bridge of information that Tom just downloaded on, which is awesome. That is almost the same thing of saying you have a really good note because the buyer has been paying on it for the last 24 months or 18 months. The seasoning is so good. That's very similar to what we're talking about with having a good tenant, even for industrial buildings, right? When you're looking through and you're going, hey, this is a good industrial, like these people are going to be, or it's in a complex where that business does well and they've been around for a while. Go ahead, Tom.
Yeah, I never really thought of the analogy of the note in the single family realm to the lease in the commercial realm, but you're 100% right. Yeah, 100% right. It's getting good paper, and that paper really is what people are buying. When you buy an office building, a shopping center, an industrial complex, what you're buying really is not the real estate. You're buying the revenue stream. You're buying the income, which is why we use a cap rate basis to determine the value of it, right? We're not buying real estate. With single family, you're buying real estate. And that's why you're using a comparative analysis to value it. But with commercial, I'm buying real estate. And I think that's a leap that a lot of single family investors don't make, is you're not in the real estate business anymore. You're in the business. Your real estate is a business that generates a particular amount of income, of revenue, of profit. And the value of that commercial real estate is based on its ability to bring in a profit. So you had talked about the center that just never does well. And
Right.
in every city across the nation, we know of those centers, right?
Right.
That you drive by it for years and you're like, oh my gosh, I just feel sad for this center. It sucks. It's always half vacant. And a lot of times, and you brought up some really great points about what could cause that: ingress, egress, traffic flow, things like that. But what about the ones that are in a really good area? They're in a good neighborhood. They're on a good corner. They have good ingress, egress. They are a signalized hard corner. What's their excuse? And a lot of times it's the tenant mix. A lot of times it's their inability to attract good tenants. And why would they not be able to attract good tenants? Most generally, it's price. We've gone through a metamorphosis that I talk about a lot in office buildings and retail centers over the past, really, we're still going through it with office right now, and retail centers have been going through it for 20 years. And I would say that process is just about finished in the retail sector. But the metamorphosis, for those that are still lingering out there in the old way of doing things, the old way was that you didn't bring in anybody that wasn't a national credit tenant, and you brought them in at these high price per square foot rental rates. Yeah. And a lot of the companies and stores that used to rent that space are no longer renting that space. So that space needs to be refined. The price needs to come down, and they need to start attracting regional and local tenants that can't pay $25 to $30 a foot, but they could pay 8 to 15, right? And some of these old owners are just adamant that they are not going to bring in anybody that isn't a national credit tenant. And so their space sits vacant, and it sits vacant for years on end. And I think until they get through their head that retail changed a while back, just like most people don't use AOL anymore. Well, most people aren't paying that kind of dollar for retail space unless it's on a dynamic road in a major market. So a lot of these lingering centers, they haven't gone through the metamorphosis because the owner hasn't allowed it yet. But that's the fix for it.
That's the fix. Yeah. And we do see those. And, and I mean, if you're in certain areas, and those who are, again, if you're listening to this and trying to just really grab a hold of what we're talking about at the level that Tom's talking about, for sure. What I've seen is there's shopping centers, even industrial places, where they're becoming more proficient. Those who are full, not the vacant ones or the 50% full, but they're becoming more proficient at what type of tenant mix, because things have changed. So it's a restaurant with the gym, with the nutrition store next to it, maybe an IV drip center that's in there. Those are popping up. Those are doing well also. All these things. So that way, when someone knows, hey, I'm going to go knock out a couple things all in one turn, and how they complement each other it's really an art. And it's worth talking to very well established leasing brokers are going, hey, we've seen the dynamics and these two couple together really well. Maybe you should go contact them.
Well, another piece of that change, or metamorphosis, as I keep calling it, is that we're seeing when the price of retail space came down, a lot of people that used to rent office space decided to move to retail space because the price was now very similar. I used to have a dental, I don't, but let's just say somebody's thinking, I used to have a dental practice in an office building. Well, there is zero visibility to traffic, zero, right? Unless somebody sees my little name on that placard, on this big sign out front. But for now, because of retail space has repriced itself over the last 20 years, I could take, for the same price per square foot, and move into a shopping center where everybody's going to see my storefront as they're driving by to the Dollar General store, right? And I'm going to be able to increase my foot traffic for new patients. So you think about it for
Right.
dentists, doctors, attorneys, urgent cares, all of these things that used to use office space, you're now seeing a spin to a shopping center or a retail type space for a similar or a little bit more in price per square foot. And they're getting a fantastic amount of traffic, visibility, walk-ins, new clients with no extra marketing budget. So that is now putting even more pressure on office space, which went through COVID and has its own set of issues.
Right.
From home and, Zoom calls, all of this type of stuff. So all of this is really fascinating. And all of it, if you study it like I do, it creates these niches. It creates these opportunities. So where would the opportunity be for your viewers? Look, if you see that crappy shopping center in your town that's 50% full, take a look at it and see if it's the old style shopping center where all it has is shopping in it, or is it the new style, which I've named neighborhood service center? Because my shopping centers have very little shopping in them. We put services in there. We put people in there that have a doctor's office, a dentist office, the chiropractor, the eye care, the IV drip, the hyperbolic chamber place. I mean, we have all of these types of things. In addition to the State Farm agent and the financial planner and the CPA, all these professionals are now looking at retail space to put their business because of our traffic. That is our attractiveness to them. They love our traffic that we bring through, that the office buildings don't offer. They don't bring traffic.
No, they don't. That's in such a good point. For those who are listening, that was a master class right there of what has been happening. Like I marked down the time on when that happened, Tom. That was so good to just give a good high level overview, because that's where we wanted to go in this conversation anyways, of like, what's happening in commercial? What are you seeing different? And this is a good start to why we've been seeing those transitions and why, and that's a good point. Like why a center is 50% occupied. Is it because there's the black top is no longer black and it's like a dingy brown and there's no stripes anymore in the parking lot? Or is it because of tenant mix? Or is it a mixture of you can't get good tenants in there because you do have a dingy parking lot? And so these are cool things. You can't, in the single family world and even some multifamily and some other stuff, it's pretty simple. It's like you're going to attract the quality of tenant, quote unquote tenant, guys, on the quality of the property. All right. And that's how it works. So you can have a really nice neighborhood, but if you don't do a good fix up to the property, you're probably not going to get a higher quality tenant. That's not typically what happens. It's the same thing, what I've been finding more and more in commercial. And this is the part, Tom, that excites me, because when it comes to that part of going, we can fix that. Or, hey, did you see that over there? That's not very expensive to fix up, but I bet you we can get a better tenant if we just do this other thing. Or did you see that other thing over there? You think we can move this or put a window in somewhere where, like, man, there's no windows over there? Pop some windows in there, get some more exposure and attract a different type of tenant. It's the same thing, just a different product. And to me, that's the exciting part about it, because I still have some of that residue of that single family world that I came out of. And most people know I came out of that world. But there's still a little bit of that there, saying, okay, you could still there's not huge $1 million value add, but there are value add where the value is getting a better quality tenant. If that means your shopping center just doesn't have needs the new blacktop and striping, but we would love to be in there. I think it's a great location. That's a part where you negotiate, right, Tom? You can actually negotiate with tenants at this level.
Absolutely. Absolutely. When we're looking for a commercial property, it's no different than single family. We're looking for a property with problems, but more particularly, we're looking for fixable problems, right? If the location sucks or it's in a decline declining area where people don't want to move there. In fact, they want to leave there because it's horrible, it's crime ridden or whatever. That's not a fixable problem. You know, I can't fix those types of issues. So I'm not going to ever even buy that property. I'm never even going to look at that property, regardless of how profitable it looks, because it's a good long investment for me or my investors. But I'm looking for a property that's got fixable problems.
Yeah.
You know, if I'm looking at that half vacant center that's in a good area, on a good street, it's got good ingress, egress, but it's got a gray, dingy parking lot. It needs new stripes. That's a cheap, easy fix. And let's say that the owner has owned it for 40 years and he's just hell bent on not putting anybody in there but a national credit shopping type situation.
Right.
That's a fixable problem. I can bring a dentist or a chiropractor in there, and I can start making this into the new style center of a neighborhood service center. And if bought at the right price, I can recalculate the rates, I can recalculate the rents, and recalibrate it rather to what it should be, and not the old style. There's a lot of these guys that are still holding out, thinking that the 80s are going to come back. And they're not. They're just not. They're not going to come back. So these properties have to be recalibrated.
Yeah, that's so good. At a macro level, when we look at commercial across, and we're specifically talking about the nation of like the America, and that's basically where we are acquiring properties. We specifically have areas of the nation that we will buy in and that we acquire assets in. However, when we look at, are you looking at stuff at a micro level as across the nation anymore? Or are you now at a place of going, okay, I know what's happening in what sides of America and where I want to be buying and what's happening there? And then what is happening besides what you're saying? That transition, I wrote that down. That, guys, that was gold. I'm going to send this out. I'll probably make a snippet of that thing because that was so huge that I don't think most people even see that's what's been happening besides the COVID stuff. I think they saw the COVID stuff, Tom, of the shutdown and everything in the office and work from home as the catalyst that made everything happen. And really it was happening 10 or 15 years before.
Yeah, it's been, that's the part people have missed. You know, the COVID, that was the big glaring issue for office.
Right.
But the issue for office is brewing and has been slowly happening for 2 decades. Absolutely. Wow. Absolutely.
So what's happening macro-wise in what you're seeing?
Yeah, so on the macro, I mean, we do look for properties nationwide. We're not just working in our own backyard anymore. That's pretty limiting. I wouldn't be able to buy much if I did that because of the assets that we're going after and the size of the property and so forth. But conversely, it's easy to manage what we buy nationwide as well, because again, I don't have residential tenants. You know, we don't have 1-year leases. You know, we're doing 10-year leases with options. Some of these will go 20, 30 years before that tenant leaves. So we don't have the kind of turn would have in a single or a multifamily complex. So we're looking nationwide. I have particular places that I like to look more than others, obviously. My number one thing that I look for is a place that people want to be. That's where I want to invest my money and my investors' money is let's look, where are people moving to, and let's stay away from where people are moving from, right? So, I mean, it's so basic and sounds so simple, but a lot of people miss that. Right. You know, and a lot of people will go, man, this is a great deal in such and such. And I'm not going to pick on any state or any city, but you know, this is a great deal here. And I'm like, yeah, how many people want to be there? You know, the last I looked, the out migration was higher than the in-migration. Right. And that's the number one thing that we look at. And again, it sounds so basic and so simple, but it's missed by a lot of people. So, you know, we want to invest where people want to be, because that asset is going to be worth more and more and more as that area continues to grow. Another thing that we will do is we'll buy in rural areas where it's not really a growing population, it's a stable population. And we'll look back 50 years at the population in that particular area, 1 mile, 3 mile, 5 mile, and then the population of that particular zip code or town. And as long as population count is solid and it's not declining, that's something that we'll look at as well. I know a lot of the bigger buyers stay away from those rural markets. So that gives us a little edge. It gives us an in, and we don't have to fight with the big funds for those particular types of properties. And I like to play in sandboxes where, there aren't a lot of players.
Where we can win.
Yeah. I don't want to share my toys.
Yeah. That's awesome. So just a recap, and then for the audience that's listening who might be coming from single family or already get involved in commercial or growing in commercial, what is something that is, you would say, well, we call it the power play move. What is the power play move that other people can do? And I think you hinted on it throughout this podcast of taking maybe a baby step, but what is something that you would say, man, this is a power play move that everybody in 2024 should be, if they don't, it should be on their radar to be looking at?
Well, I would say make that step. Like I've said a couple of times, maybe do a smaller property, or if you want to make a bigger move than that, go find a good bigger deal and partner up with somebody. Call Gabe, call me, call somebody that's already doing the bigger deal and say, look, I know I'm only going to get a chunk of this, but a chunk of something is better than all of nothing. And the knowledge you're going to gain by doing that is more valuable than anything you're paid on that deal. I mean, yeah, you want to get paid too. I'm not trying to say you shouldn't, but at the end of the day, that should be the secondary in your mind to the knowledge, because the knowledge you'll use forever, and you can use that on thousands of deals. The money, you'll have that spent pretty quickly, just like the rest of us do. And, you'll forget about that next year, but go find a deal, because that's the power. If you don't have the money and you don't have the experience, you only got one more thing available to you, and that's the deal. Right. Because if you come to me and want to partner with, in some way or form, you need to bring one of those three things, or what would I need you for? Right. So if you don't have the money and don't have the experience, go get a deal. But the deal is probably more powerful than the other two, because there's fewer of them than there is the money or the experience. So that's something everybody listening to this can go do.
Guys, that is an amazing power play move for you to do in 2024. This podcast is done in December. So we are getting all pumped up and ready to go for those. This should be coming out in probably a few weeks, but you guys will get this for this year. And so if you guys have any questions, you want to connect with us, you want to connect with Tom Berry. Tom, what's an easy way for them to get a hold of you?
Yeah, so you can follow me on Facebook at Tom Berry REI. That is also one of my website addresses. That's kind of my overarching website address. And my email address is tom@ils.cash. tom@ils.cash.
Awesome. All right, Tom, thank you so much for joining us, and we'll see you guys later. Peace.